Hello, everyone. Welcome to today's webinar on the election and the policy implications. My name is Dan Veru. I'm the Chief Investment Officer at Palisade Capital Management. I'm joined today by Allan Chernoff, and we're looking forward to having a discussion that is going to really focus on the policies, not necessarily the politics around the upcoming election. I think we're all going to be very happy when we don't have to be subjected to the endless barrage of campaign ads. This is one of the most unique elections really in our history. First of all, we have a woman running for the highest office in the land. Secondly, we have a candidate who was the president, and if he wins, it would be only the second time that a president has served a non-sequential term since Grover Cleveland. It's not just the presidency, it's the composition of the Senate and the House and what sort of policies that will affect financial markets. Allan, you have been in a seat, as I have, to history, watching many election cycles at your time at CNBC and CNN, and seeing what really has been the influence of elections on the broader financial markets. But before we get into some of the policy implications, what's your sense of the race and where it stands right now?
Right. Well, what makes this also an exceptional election is that really nobody knows what's going to happen. And as a member of the media for 3 decades at CNN and CNBC, reporting on elections, reporting on the issues, the polls were always very important. You know, people want to know what's going to be happening, what's the race going to ultimately deliver. And right now, nobody knows. And it's not just that the media, can't tell you where we're going. It's the polls themselves, right? The polls are pretty much dead even. And on top of the fact that the polls are dead even, there's also the issue of, well, will the polls end up being accurate? Because the last 2 presidential elections, actually the polls have been off. They've missed a lot of the strength of the Republicans. They missed the Trump strength. Even when Biden won, he was forecast to win maybe by 8 points or so. It turned out to be closer to 4 points. So the polls have not been on target. And things have really changed in terms of how these polls are done. It's just harder than ever to do a poll. Who picks up their phone, right? Who still has a landline? Do you do it by email? How do you reach people now? It's harder than ever. And as a result, frankly, the polls are less accurate. So who knows what's going to happen here?
Right. Yes, absolutely. And over the weekend, you had a Des Moines Register poll that showed surprisingly a big swing towards the vice president.
Yes, and that's actually a very well-respected poll. The Register itself is a very well-respected newspaper, and the pollster, Ann Seltzer, very highly respected. So who knows?
Yeah. I have a feeling we're going to be up awfully late and
into the next day.
Into the next day for sure. So I'd like to talk a little bit. This is a unique election in that the approach is so different between the 2 candidates, with clearly the biggest one being the former president's use of tariffs as a means of getting deals done around the world. But that has implications not just for the U.S. markets, but could have implications for markets around the world.
Yeah, well, it certainly could impact trade, obviously, right? And industries that are off to the side that you think maybe aren't involved or not affected, they could be slammed, right? When Trump put in the steel and aluminum tariffs, agriculture ended up getting hit.
Right.
Oil, energy could get hit, right? All of a sudden we get into a trade war, potentially, who knows? And I think it's so important to talk about the tariffs because that's something that Trump actually may be able to pull off if he wins, right? By executive action, and there are a whole bunch of different acts that sort of give him the ability to pull it off without Congress, because Congress may end up being split, and it's I don't think it's likely that one party is going to own Congress, but again, who knows for sure.
Right. And the Harris position seemed to be supportive of existing Biden policies with some modifications, of course, but certainly supporting, the considerable amount of fiscal stimulus through the various programs that were passed. That none of that seems like it's at risk if the vice president becomes the president.
Right, and it's important that we all recognize there's so much more spending to come, right? The Inflation Reduction Act, which of course is a huge stimulus for clean energy, for industry, for the economy, that had well over $300 billion over a decade. And most of that hasn't been spent just yet.
Right.
So if Trump comes in and he says he wants to wipe it out, that could have implications for industry,
Right.
and not just the energy industry.
Right.
It's crazy.
Yeah, right. And whomever is the president, in January, we hit the debt ceiling. And many have cited a coming liquidity bazooka of $700 billion that could flow as a result of hitting the debt ceiling
Right.
in that time, unless something happens in the lame duck period. I read an article that the former president tried to negotiate something with the speaker in the lame duck session of increasing the debt ceiling, and was not supportive of that view. So that looks like will be regardless of who wins, that's going to be the first test
Right.
of the new year.
The one thing that we probably can count on is this battle over the debt ceiling, right? That's been a huge problem over the past several years, and it's almost certainly going to continue to be an issue. And you also can count on higher deficits as well, right? The debt load just increasing and increasing.
Right.
Whether it's going to be 15 billion as the Committee for a Responsible Budget estimates over the next decade if Trump comes in, or half that if Harris comes in. Either way, we're talking about massive deficits.
Right. And again, regardless of who wins, it doesn't seem like it's going to be a sweep from either party. And could you talk a little bit of how you see divided government for the stock market, and what you've seen in the past?
Right. Maybe that's our best hope, actually.
Yeah.
Right. Because typically, when you have a split between the executive and Congress, that's actually been better for the stock market over history. So maybe we can put some faith in that. People are wondering, well, Trump be so bullish for the economy, for the stock market, and maybe Harris not so much. But if you have division, if you have gridlock's usually healthy for Wall Street, for the economy. So that could be a real positive.
Right. And to the viewers, if you have any questions, please submit them, and when we're done with our discussion, we'll answer any questions that you might have. Again, this is so historic from so many different perspectives. If Vice President Harris becomes the president, it's unlikely that she will have the Senate, and that has very interesting implications, because it would be the first time a newly elected Democratic president did not have her party in the Senate. The House has always been a bigger variable. You wonder how that potentially could influence cabinet selections and what sort of policy implications. The Fed chair when Chair Powell's term is up, and there's certainly a broader range of view on the role of the Federal Reserve, and I'm curious if you have any thoughts on that.
Yeah, that's a great point that you bring up, and we've seen this over a number of administrations, right? The new president comes in, makes selections, and then has so much trouble getting those nominees approved through the Senate. So people who are concerned about increased regulation and all that, some of that really may not come to pass. Harris, if she were to be elected, may not be able to get her people in so quickly. That slows down the gears of government. There's no leader at a certain department, and certainly in financial services. So it's not as if they're going to clamp down immediately, even if Harris were to win.
Right. Or could shift away from perhaps an activist approach to more of perhaps a more mainstream approach,
right,
with some of those.
And another thing to consider, if Harris were to come in, say that she wins, but it's by the narrowest of margins, which if she were to win, we can assume that's likely to be the case. She may not want to take these extreme, what some people think are maybe extreme positions. I mean, fracking in Pennsylvania is a good example, right? Most people would think, oh, she's against it, but she said, I'm not ending fracking, I'm not stopping it. It's so important that we try to somehow unify, that the president tries somehow to unify the country. Right. I'm not sure Donald Trump is terribly interested in all of that, but Harris would try. And so that would moderate, I think, any left-leaning policies, or at least some policies, certainly in regulation, I would think.
Right. Yeah.
No, good point you bring up.
Yeah. And certainly, regulations have moved up considerably in a variety of different industries, financial services, for example, and you can see some of the movement in stocks around the financials, mainly the banks.
Yes.
And I'm just curious whether you see any significant changes between the two candidates on how they might approach things like banking regulation.
Right. Well, under the Biden administration, they have been pretty aggressive in trying to enforce consumer protection regulations and all that. You can expect that Harris would just basically continue that. Trump probably pull back in that area. So this leads to thinking, well, so Trump would be great for the financials. But if you look at, for example, the regional banks, right? They actually performed better under Biden. They've performed better under Biden than they did under Trump.
Right.
So, you might think a policy is leaning one way under one president, but does that necessarily translate into better performance within that sector of the market?
Right.
It's crazy.
Right.
This is also true with energy,
yes.
Right? Energy, everybody thinks Trump, dig for oil, let's drill. But in fact, energy didn't perform well under Trump. And it's done much better under Biden.
Till recently, absolutely.
Yeah. So, when we make our investment decisions, we don't necessarily want to say, oh, well, Trump is pro this, therefore I've got to buy these stocks.
Yeah.
It can be a lot deeper, and the initial thinking may not be how ultimately portfolios respond.
Right. Switching over to Trump for a moment. I mean, so much of his rhetoric's been around America first, and I just can't. Again, it's somewhat speaking our book, given that Palisade is expert in the small cap space. That seems like that would be a considerable his presidency. Again, I'm not necessarily saying that it would be perhaps that much different, but one would have to think initially the markets would get very excited, i.e. the Russell 2000, where you have valuation support. The valuations are much lower relative to the large cap stocks. We already seem to be in the early stages of a small versus large cap outperformance cycle. I'm just curious if you have a point of view on perhaps where small caps could be as we get this more America-centric type of attitude.
Right. Well, I mean, they certainly have been benefiting from the shift in interest rate policy, right? Rates, at least short-term rates, right, have been coming down. That did spark, as you forecast, did spark nice gains for the Russell 2000, the small caps. And if we really are doing an America first, we're reducing dependence upon overseas trading partners. In theory, that should be good. The small cap companies, as you know, are much more focused on the United States. The revenues, much higher percentage coming from the US. They're not as internationally exposed. So in theory, that that should be an area that benefits from a Trump victory.
Right.
But again, we can't be sure of that, right?
Not a one size fits all. That's
Yeah.
for sure.
I mean, there's still many of them are still dependent upon taking in at least raw materials from overseas, for example. If tariffs are imposed, a trade war ensues perhaps, and all of a sudden the expenses for small companies could rise.
Right.
And so that might hurt margins. So even though in the big picture, maybe if Trump is pro-America, but if you look at the bottom line for some of these companies, they may not benefit.
Right. And certainly, some of the indicators that we look at, and perhaps higher bond yields is perhaps the best. It's interesting, since the Fed lowered interest rates on September 19th, the 10-year Treasury yield has moved up from the high threes to around 4.25%.
More than 60 basis points.
Yeah.
Yes, it's a really big move there. And that's important. I mean, before we went on, I was asking you whether you think that could that lead to a change in Fed policy, right? We're in an easing mode now, and everyone expects the Fed's still going to take another cut this week, but will they shift?
I don't think they're in a hurry. I think, it's interesting. We're not going to, the Fed's going to meet this week and come up with their policy decision. I think it's probably 25 basis points, but after that, perhaps they may slow walk things quite a bit, because the economy, while slowing, is definitely not slow,
right?
And it's healthy, and we're definitely seeing it in corporate earnings. Earnings have been approximately 70% of the S&P has reported earnings so far, far less of the small caps. But the earnings picture looks pretty good so far. It's better for the tech names because of how highly priced, highly valued they are within the large cap space. There's certainly a higher bar for them to meet than in small caps. But we should actually see corporate profits for the Russell in 2025 actually grow faster than for the S&P 500. Some of that is the law of large numbers, because these companies have had a great run, but the nimbleness of small caps certainly is something that we're paying very, very close attention to. But if you thought about other small cap cycles, were there anything that you could perhaps put your finger on that was a major catalyst in the past that perhaps looks similar for the cycle that we're in right now?
Well, I mean, in terms of the small caps, we often look at valuation, right? Because they tend to, let's say, lag what's happening to the big caps. If people are bullish right away, shove money into an S&P index, for example, something like that.
Right.
And so, valuation, and you mentioned that, and we've got that story here, right? Yeah. Now the S&P 500 forward earnings is 21 multiple or so, right?
Yep.
Pretty pricey. Nobody can say the S&P is cheap.
No, but 35% of those companies traded a much higher multiple.
Yeah.
Above 30.
Right. Those are big numbers.
Yeah, they are big.
Yeah. So, from a valuation perspective, as you've pointed out, and we've seen that in the past.
Yep.
A lot of times say, well, hey, look, the small caps are still a decent bargain. Probably the case right now.
Yeah.
Right? As you've argued. Yeah.
And one of the other things, and again, I don't know, perhaps this is just perception and reality, but merger and acquisition activity has been down, and Lina Khan has certainly taken a much different approach to consolidation as head of the FTC, and has ultimate authority on allowing for consolidation in various industries to go through. But I'm curious whether you think that would be different under a Harris presidency versus a Trump presidency.
Yeah, well, I'm sure Trump is going to put somebody new in there. That's a guarantee.
Right.
And, Trump all for allowing consolidation, much less concerned with consumer protection and all that. I think Vice President Harris, if she were to be elected, she's talked about stamping out price gouging, quote unquote, all that. So from that perspective, she probably would, I would think, stay fairly consistent with this tough regulation policy.
Right.
On the one hand, yes, she doesn't want to move too far to the left. She wants to try to be a president for all and all that. But at the same time, she talks about, inflation has been such a huge issue in this campaign. And so if there's concern that M&A is just consolidating industries and allowing companies to increase their margins and consumers ultimately paying for that, I think she'd probably stay the course. Yeah, that's what I would expect.
Yeah. You touched on oil, and yes, there's no doubt about it. Anti-oil approach by President Biden was the best thing for the energy companies because the stocks did really well. Production went down for a period of time, but now production is at all-time highs. Now, perhaps that was encoded into the system already, but it seems like perhaps Trump could be even more supportive of further drilling. And I read that LNG would be one of the beneficiaries of a Trump presidency, because potentially from a geopolitics standpoint, it could really reshape Europe by being their supplier of energy products.
Right. Well, it's our number one export is energy.
Yeah.
Right. So I think certainly with regard to allowing more drilling, increasing supply and all that, Trump is absolutely a positive for the energy industry.
Right.
However, we go back to the tariff issue, the potential of a trade war. And do we have certain countries that are now accepting U.S. oil, U.S. natural gas?
Right.
They say, you're slapping a tariff on us. Guess what? We don't need your oil. We don't need to get it from you.
Right.
So ultimately, his total policy approach could backfire for the energy industry.
Yeah, definitely could. Though he said it allows him to negotiate, but who knows how that.
Right.
happens,
Another thing that I think is really important for people to consider is that, look, Donald Trump, whatever you may think of him politically, in terms of delivering on what he promises, in terms of his promises, he doesn't have a track record there at all. He is a BS artist, frankly. You could say that about every politician, but he really is, you can ask a contractor who has worked for him, or investors in his Atlantic City casinos who lost most of what they've invested. So, there's not a good track record in terms of delivering on what he promises.
Right.
Let's just keep that in perspective, without choosing sides, left or right.
Sure. In fairness, the vice president's views, which were very public when she was a candidate for president.
That's right.
Were also many of them are diametrically opposite. So
these people are politicians. That's the bottom line.
That's right. That's right. So I guess the one thing that if there is one thing I worry about in the outcome of the election, regardless of who wins, if we just don't know, leaving aside perhaps what Trump might do or what Harris might do if contesting certain things, but you remember Bush v. Gore. We didn't know who was going to be the president for, I believe it was 6 weeks.
Yeah, busy counting the Chads in Florida.
Yeah,
right.
Yeah,
that was, and everybody thought, well, that's historic.
Yeah.
Well, this could be even more contested.
But in the middle of all that, the Federal Reserve did a 50 basis point cut, because you really saw, now again, some of the economic seeds were already in place, for the economy slowdown. CapEx was dropping. You had that excess spending during the dot-com boom and the subsequent bust. But you know, that's the one thing I worry about, is that if we don't know, what does that do to consumer spending? I mean, regardless, we all are innately want to have some certainty around that. That certainly is what markets thrive on. But I'm just curious if you have a point of view on that.
Right, markets hate uncertainty, right? In theory, and you know, we do have a lot of uncertainty here. Yeah, I mean, I think number one, that's a good point you make with regard to the Federal Reserve, right? So the Fed is in easing mode right now. Let's say that Trump were leading but not winning just yet, and we don't know who's eventually going to emerge as the victor, and that goes on for, who knows, for a couple of weeks. I mean, I don't think you're going to see a shift in the Fed's position. You know, they'll probably still be accommodative for sure.
Right.
And yeah, you know, I mean, I think it can lead consumers to hold back.
Yeah.
You know, people are whatever, they're in front of their TVs instead of out shopping or things of that sort. I mean, who knows? Although these days they can be in front of their TVs and still shop online much easier than they could back when you know they were counting chads.
That's right. And yeah, I mean that definitely is something that I think would be, yeah, perhaps that causes for me some pause, because how do you know what the rules of engagement are going to be? We're already hearing in quarterly earnings releases some management teams citing some deferrals of certain spending as companies just want to know, you know, I guess, again, that gets back to our original point, how different the approaches are among the two candidates here.
Right. I would think purchasing managers, if we don't know who wins, and if there's a real battle out there for several weeks, you definitely could have a hit to the economy. Right? People pull back. What's going to happen? How can a company accurately make forecasts? You know, particularly if they're in an industry that Donald Trump is targeting, or that Kamala Harris is saying we're going to provide incentives. Right? I mean, what about, for example, the home builders? Right? She's got huge plans, right? Saying 3 million new units, billions and billions of incentives for the home builders. Well, they can't jump just yet.
That's right. No, that's right. But regardless of whomever leads the country, I think deglobalization is happening, and the U.S. as a manufacturer is on the upswing, and while supply chains are in the process of getting untangled and moving away from China only to more of a pan-Asian approach, certainly India looks like they could be a big winner, regardless of who becomes the president, because I think that the genie's out of the bottle vis-a-vis China. Certainly post-COVID, I think there's going to be company CEOs never forget what they went through during that period of not being able to source. But that's all great for the U.S., but it is inflationary. And I'm just curious what you think from a structural standpoint. Now, again, we've had very, very little inflation, and the Fed's target of 2% was aspirational when it was below 2%. But do you think that given the structure that we have on a going forward in terms of changing the supply chain dynamics, that we'll ever get to a 2% inflation rate?
Well, I mean, the trend's pretty good. I mean, I think a lot of people on Wall Street are surprised just how successful the Fed has been, right? I mean, that we're not quite at 2%, but if you look at the PCE, you know, the core PCE, boy, it's really getting pretty close. So there's certainly a chance that we get down to that level. I don't think that the Fed is as insistent upon getting back to that 2% level as it maybe had been a couple of years ago, because they've really done quite a good job, you know, not throwing us into recession, maintaining some good growth there, and the inflation rate still coming down. So yeah, I don't think we're in big trouble at the moment. as you point out, with the deglobalization, if we're not going to bring so many cheap imports from China, yeah, that could push inflation back up.
Yeah.
And especially if the Fed keeps loosening, and perhaps, last time the Fed overshot, they have a habit of overshooting.
Yeah. Well, yeah, we've been talking for about a half an hour, and we've gotten some questions from people listening in. Since you kicked off and you talked about the deficit spending being larger under Trump than under Harris, and I'm just curious. And really, the question is, how do the markets react to not just that, but we haven't really talked or addressed the wars overseas, and certainly one area that looks like it's safe is higher defense spending, regardless of which candidate wins the election. But I'm just curious if you have any thoughts on, is the deficit, you and I have talked about, we've already hit that magic number where the interest expense as a percentage of tax revenues is above 14%, when the so-called bond vigilantes start to pay attention and really force policy changes. Do you think under Trump that accelerates? Because there hasn't really been much of a reaction so far in the bond market.
Yeah, well, you certainly could. You have seen, some concern with bond yields moving up very recently, but it's hard to imagine that we really attack this deficit. You can't do much about the interest expense on the deficit. That's going to be there. Deficit spending is likely to continue under either of these two candidates. Defense spending, we don't see that cooling off anytime soon, right? Things are more tense now than they have been in a long while. You've got the Ukraine war and the war in Israel. Neither is showing a sign of ending,
Right.
Very sadly. And you've got continued tension. I mean, Trump says that he can instantly end wars. I'd love to see that happen.
Wouldn't we all?
Yeah, bring it in.
Yeah.
But even if that were to happen, the U.S. is not going to cut defense spending.
Yeah.
And on some missiles, we're actually running down a bit on our inventories. So there's a big backlog for companies like RTX. So
Yep.
And those companies performed well.
Yep. I have a question. This is a really good one about the role of the Federal Reserve Chair and the president's ability to remove and or expand powers. I mean, this is not new to Trump. No president likes their Fed chair because they want interest rates as low as possible because it's an economic tailwind for them.
Yeah.
But I think Fed independence is critical. Do you think that either candidate might challenge some of that independence, and they can jawbone all they want, but taking it to the next level and say that you're going to remove a Fed chair is something that's never been done before.
Yeah, well, that's a Trump style, right?
Yeah.
Trump's style is to threaten, to yell and scream and complain. I don't think he's going to replace the chair of the Fed. I don't think that's going to happen. But he'll talk all he wants, and he'll make threats. He'll make the job really difficult so that someone like Palisade, enough already, get me out of here.
Yeah. And
I don't think Kamala Harris is going to touch that area at all.
Yeah, I don't think so either. But Lael Brainerd has been someone who's been talked about as a potential
former vice chair who left the Fed.
That's right. That's right. And wanted the job. And didn't get it from Biden. But her approach is much more of, interestingly enough, an activist role for the Fed, giving them dramatically expanded powers to shape some social policies. Yeah.
Well, it's not talked about much in the general news media, but Federal Reserve is, in many regards, more important to the economy than the president, right? really, really critical roles. So that is something to watch for sure.
Yeah, and that's a great point to make. A lot of these things are on the edge, but regardless of party, I mean, the stock market really goes on increasing profits.
Yeah.
Once companies are flexible and once they understand the rules of engagement, they can calibrate to whomever is leading the country and the policies around.
That's a great point. In that regard, Wall Street can be a lot smarter than Main Street, just because you can put it in perspective. There's so many Americans right now who are panicked over the right taking over or the left taking over. Wall Street is basically saying, hey, the country will continue, the economy will grow, companies, as you say, know how to adjust, and they can continue to deliver for us as investors.
Right.
And that's really something that we can take heart in this time where the country's so divided and there's a lot of anxiety over the election.
Yeah, that's right. Man, look, it's understandable. This is a very being respectful of everybody's politics. Everybody has very strong views of these two very different candidates and has their own concerns, and certainly not to play those down, but you can't let those concerns change your investment strategy or alter how you allocate your own capital, because some of the mistakes we all see are just thinking that changes everything, and you have to get out of stocks or into bonds, or out of bonds into stocks, or just into cash or whatever.
Yep. As it's often been said, don't invest with your emotions, right?
Yeah.
Deal with the facts.
Yeah.
For sure.
I've not heard that Chair Powell was going to resign. That was a question. If Trump were the president, I don't believe that would be.
That's not going to happen. No. In fact, I mean, I feel very strongly that he feels he has a job to complete.
Yeah.
Right. The people running for president always say that, but Powell really genuinely feels that because he probably, the Fed really fell behind the curve, allowed inflation to get much higher than it should have been, and they've been working to correct, and they're getting the job done.
Yeah. I mean, all signs, and speaking with some economists last week, that we may have averted and may have had a soft landing. The economy continues to grow, and certainly that's the low probability outcome all the time. You usually need the cleansing effect of a recession. But as you see things now, what's your best estimate of when we're going to eventually face a recession and a pullback in the economy? What would be your best estimate of when that could happen?
Boy, that may depend upon the results of the election. It really could, right? I mean, it's certainly possible that, we mentioned the idea of a trade war, for example, or people pulling back, uncertainty as well. So it's not going to happen, I don't think, within the next, let's say, the next year and a half. But things can change, and it's often an unexpected shock, right? That hits the economy. Something that we weren't looking for,
right?
And who knows what that could be? And so we're looking at the election. We're thinking, what are the policy implications going to be? Very, very likely, what ultimately hits the economy may not have much of anything to do with the election,
right?
Who knows? Could be wrong, but there may be some exogenous shock that whacks the economy, and then we'll recover from it too.
And that always exists whenever you're an investor. Everybody's asking, what do you worry about? I always worry about what I don't know.
Exactly.
Right. It's very difficult to quantify what you don't know.
Right. And that helps explain also why we see so many short-term swings in the market.
Yeah.
Right. Just either emotion or suddenly something changed. Okay, we see a big sell-off, and the next day you see a bounce back. Right. That tells you that it's emotion moving the market there. Right. One or two big companies miss their earnings estimate. The stock gets whacked, takes the market down. People who are relatively new to the market, or who haven't really lived through a crash or whatever, they panic. I'm sure that your firm gets enough calls from some new nervous investors saying, "Oh my goodness, what should we do?" You say ride it through, and then and that tends to be the right decision.
Yeah, and I remember coming back from Europe, and it was right after the unwinding of the yen carry trade when we had a big reaction early in August to stocks. But from our perspective, we really didn't see anything change. So it's just a matter of saying that.
I should also add at the media perspective here, right? I mean, during the many years I was at CNBC, the market does a huge move and the newsroom is a buzz and we want to make a big deal of it because it attracts viewers, it attracts investors. But what's going on CNBC or Bloomberg or Fox Business Television doesn't necessarily indicate that that's a trend, that's going to continue. There's just excitement from the reporters, from the newsroom. They're covering these markets all the time. And when there's a big move, it's extra exciting. They want to make sure the viewers are there, that they're listening. Reporters, especially in television, they have to generate some excitement. You need to, especially these days, you need to pull in the viewers. You need to keep the viewers watching. And so the media tends to make a bigger deal sometimes over short-term moves in the market that may not be indicative of what's really going to be happening.
Any big change. We keep forgetting that stocks rise because profits rise over the long run. What happens in the short run is anybody's guess. But anyway, one final question, and then we'll wrap it up. And I think it's a good one. The former president has talked a lot about immigration and mass deportation, and clearly the U.S. economy has benefited from a lot of the immigrants that have come to the United States. But obviously, there's been a byproduct of that too, where you're not getting perhaps all the best people in this country. Just curious whether you think it's realistic or whether there could be a real economic impact on an aggressive deportation.
Yeah, right. Well, if Trump were to follow through with a very aggressive deportation, obviously you're going to lose a lot of necessary labor here, and at that, labor at relatively low cost, right? So if he were to follow through, I think there's no doubt that there would be an economic impact. Certain companies would really be hit. Is he really going to follow through on his threats, on his, No, he's not. They'll tighten up the border, more funding for ICE, that sort of stuff. But like I said, he's a politician, and you can't believe everything he's going to say. He's saying things to get elected. And maybe he's saying things that he really feels in his heart, for sure. I mean, he may not be lying in terms of his sentiment, but will he really follow through? No.
Certainly. Good place to end it, Allan. Thank you very much for joining us today. Everyone, I hope you found this beneficial. We're just going to stay the course in terms of what we see. I think as we both would agree, the economy is in good stead, and that ultimately is what drives stock prices. That doesn't mean that we won't see volatility. Certainly, it's going to be elevated and has been more elevated. But in our view, I think that the founding fathers had a way of putting the system together that survived regardless of who the president is and the various checks and balances that are in the system. And I think we both agree that neither of us really see anything significant changing on that. So thank you very much, Allan. Again, thank you for joining us today. And thank you all. And if you have any follow-up questions, feel free to reach out to us. Thank you.
The information contained in this webcast reflects the views of Palisade Capital Management as of the date of its original broadcast, and such views are subject to change without notice at any time. All information provided in this webcast is for informational purposes only and should not be considered investment advice or recommendation to purchase or sell any specific security. While the information presented herein, including information obtained from third parties, is believed to be reliable, no warranty is made concerning the accuracy of such information. There can be no guarantee that any forecast discussed in this webcast will be realized. Consult your financial advisor before making any financial planning or investment decisions. Past performance is not a guarantee of future results.